right, Cozy.
Okay, guys. So infrastructure, huh? Big words. We was not here 10 years ago. We were still thinking to understand how the market gonna go, how our technology gonna start to collaborate. No.
Yeah.
I would like to start with an introduction from you, and so tell our people who you are, what is your project for, what you want to do tomorrow first. And then we're going to start from some questions. Since we are only 3 persons, we can even go back and forth on the conversation, if you like.
Yeah.
Okay? So start, Sam.
Yeah, sure.
Tell us.
First off, happy to be here. I want to give a big shout out to the venue organizers. Very excited to get to know the moderator and my fellow panelist over here as we dive into the topic of discussion. I'm Sam Elfarra. I'm a community spokesperson for the TRON DAO. I also lead on a lot of ecosystem and business development efforts. I've been there for about 4 years now, and since the inception of TRON, we've been able to settle $25 trillion in annual payment volume, since our inception. Annually, just in the past year, we've settled about $9 trillion in payment value. We average about 4 million daily active users, 12 million daily transactions, and we're continuously pushing the frontiers of payment technology. And we're also navigating capital markets, tokenization, and all of that matter. And I think it's going to be a great discussion on the infrastructure of that, the scalability of that, and then how can we create specialized infrastructure as well. So yeah, happy to be here and really excited to get into it.
Alex.
My name is Alex Gluchowski. I'm the founder and CEO of AIFlow Labs, which is the company that created the zkSync protocol 7 years ago. We are the pioneers of zk on Ethereum. We started on a mission to help scale Ethereum with zero-knowledge proofs. And this mission is now materializing, not exactly in the way as I imagined originally, but it's still materializing. And our focus these days is on zk as a core technology and on institutional adoption of blockchains. We're working with some of the world's largest regulated enterprises and financial institutions to bring them on chain on Ethereum, get connected, and be secured with zero-knowledge proofs, because that's the only technology that enables enterprises to get on chain with sovereign privacy and yet be connected to the global blockchain ecosystem.
Important. Privacy was the reason why I joined crypto. So, okay, so this is probably one of the things that moved me to enter this world, okay, where I entered by mistake. I had to use Bitcoin to pay somebody a lot of time ago, and then I become an OG, let's say. So, infrastructure. Will be this infrastructure boring like TCP, IP, all this kind of stuff, or do we are creating, preventing something better than that? And we talk about a blockchain that is not related only to Ethereum and Tron, I mean in general.
Yeah.
So if tomorrow morning, a banking system, I hope, okay, they're gonna join us and they're gonna use a blockchain or any other entity, AI gonna need it for some specific kind of data. So what you think gonna happen in the next 2 years and in the next 10 years? We start with Sam.
Yeah. You know, we spoke about this earlier. I really think we're going to see a little bit more standardization occur across the broader industry. Take a step back. Everything that involves technology, whether you're looking at it from a Web3 perspective or a Web2 perspective, has some form of interoperability or composability infrastructure that's built into it. Whether you're looking into payment finance flows, such as the ISCO frameworks and that matter, or even SWIFT, for example, when you want banks to communicate with one another to send transactions from one country to another. So those types of standardizations have been set in the Web 2 world, and I think they're still continuing to be enhanced and improved. And I think some of that improvement is going to be found in Web 3, using those types of technologies, whether you're doing it from a layer 1 public blockchain or a layer 2 for scaling purposes, if needed. I think that in itself is going to be extremely important in this type of stuff that we're going to see in the next couple of years. I give a big shout out to obviously Layer 0. We work with them very closely. Our native utility token, TRX, is now available across the base ecosystem, and it's also going to be available across various other ecosystems in moving forward. And I think things of that matter, that type of technology, allows for more mass adoption to occur, more customization to occur, and actual programmable finance. Because the last thing you want to do is to utilize a technology that's supposed to solve problems, but it's actually going to create more problems. And that could occur if we're building a lack of infrastructure from the composability, the standardization perspective, especially when dealing with payments. That's why we have so many different types of standards within payments from a Web 2 perspective. So very excited to see that kind of come to fruition in the next couple of years when we're looking at it from a blockchain lens.
And I agree that we are seeing the emergence of the Internet of Value now in its full potential, now especially with the change in the US administration, the US stance, regulators and legislators toward crypto with the Genius Act and soon to be passed Clarity Act. So there is a avalanche of adoption coming from real businesses. So I agree, there will be standards, it will be all connected. I want to talk about some non-obvious trends that we will see unfold in the next 2 to 5 years. One, I think that fully public blockchains that are transparent and fully visible will play a huge role, but they will be augmented or even eclipsed by equally large size of private blockchains. Like you simply cannot replicate the traditional banking or enterprise business operations on chain if you have to broadcast it to everyone in the world, to your competition, to everyone who wants to see. Like banks are, they can't do this according to their regulations. They have to protect customer data. Businesses have to protect customer data and also their trade secrets. So that just isn't going to work. So we'll see the rise of privacy. Now, the second big trend that I think we'll see is a lot of infrastructure today is built on shaky assumptions. And we don't see the shaky security assumptions break simply because they have not been exposed to enough scrutiny, and enough willingness of attackers to attack, and in long enough time for these attacks to materialize. Like, I mean, we've seen a lot of hacks happening with billions of dollars lost, but I think what's going to happen now with AI is a massive acceleration of the rate at which the weaker protocols will be exposed. Like we see this with bug reports coming for all types of protocol vulnerabilities now massively accelerating in a couple of last month, and the trend is going to be exponential.
Yeah, I am collaborating with an agent that find vulnerability on contracts now. So this alone is saving billions.
If I could also add into that, so looking at that from a security perspective, I definitely see the point of having artificial intelligence to ensure and kind of weed out a lot of shaky things within the infrastructure that we're building. And then I also agree with the privacy component. Obviously, banks and financial institutions, due to regulatory concerns, they don't want people, pocket watching them, for lack of a better term. They want to be able to actually conduct their internal businesses properly, be able to send transactions accordingly. But I think another thing to really point out is the autonomization of blockchain technology and the regulators that are kind of getting into it. It's very important that blockchain organizations are rooting out any sort of illicit activity that occurs on chain. And that's another point of security, not just from the AI perspective for smart contracts, but the AI perspective on finding and mitigating that types of actions that occur on this type of infrastructure. And I think that's going to get a lot more mass adoption and regulatory adoption of these types of technologies. The last thing you want to do is to regulate just the infrastructure itself if it's not needed to. Rather, we need to be regulating the actual actions that occur on chain. And that's why I'm also proud to say with TRON, we work with Tether, obviously the largest stablecoin issuer of USDT. We work with TRM Labs. The forensics group, and we have our T3 financial crime unit. We've been great at working with those regulators all across the globe. Welcome.
Welcome.
You're a little bit late, but
late to the party, but better late than never.
Yeah, that's right. I was so confused they brought the chair. I'm like, are they going to bring somebody on? Yeah.
Steven, tell us about your project, and then we're going to restart with the conversation this way.
Hey, everyone. I'm Steven. I am co-founder and CEO of Offchain Labs. We build the Arbitrum technology. Arbitrum is comprised of both Arbitrum 1, which is the most liquid leading layer 2 Ethereum, but also we have about 100 other chains that are also built on the Arbitrum technology using what's called Arbitrum Orbit. I also, at Offchain Labs, we also build Prism, which is the leading consensus client for Ethereum. So if you're an institution that's staking or validating Ethereum, there's a very good chance you're using the Prism software. And we also build something called Zero Dev, which is a smart wallet infrastructure, which I think is the new frontier, the next frontier. So after scaling is really good UX and abstracted experiences for blockchains.
Connecting with the same question, so you're going to continue this. We was talking about the blockchain. What you think is going to happen on the blockchain infrastructure in the next 2 years, in the next 10 years?
I think the biggest catalyst that I think is important for the mainstream adoption of blockchain infrastructure is actually us, fading into infrastructure. I think a bit too much today. People have almost a retail fascination with infrastructure in ways that you don't see like on the internet, for example. Right? You don't see people that are like, is that an Apache web server? Like, I'm so excited. I love Apache web. Like, you don't have that sort of fanaticism.
There's some people like that, though.
There are, but it's that.
We had some people like this in the past.
I think everybody here is
I was
like
there.
that.
But you're never going to get to mainstream adoption with that type of users. And I think the point is like, the truth is for many people, blockchain infrastructure is difficult to use. And if you actually want to get to like, a number of users that's measured in the billions, they're never going to be connecting their wallets in the way we do today and remembering their seed phrases. So the big question we have to ask ourselves is blockchain infrastructure, does it have something to offer users who can't, set up a MetaMask wallet or can't remember their seed phrase? And I think the answer is, very much yes. And for us, I'll give you an example of what that looks like. Yesterday we did a big announcement with Robinhood. They launched their testnet on the Arbitrum network here in Hong Kong. And what is that powering today? So they've launched over 2,000 equities on Arbitrum 1 today on the Arbitrum public chain. And if you go in the Robinhood app in Europe, you open up the regular Robinhood app and you buy, say, a share of Apple, you will actually get a tokenized share of Apple on the Arbitrum blockchain. And now, that Robinhood user has no idea that they're using the blockchain technology. They don't have to actually set up a wallet. But their experience is actually made possible the internationalization of the protocol, number one, the fact that they can get 24/7 trading eventually, the fact that they'll get instant settlement eventually, all that is actually made possible uniquely by the blockchain. So very much, the idea is when I go on my phone and I order an Uber or some food on DoorDash, I don't actually think about again, maybe some people here do, but I don't think about the deep protocol stack. I just think about I'm getting food or I'm getting a car. And I think for many, it's I'm getting stocks. I'm getting access to U.S. equities. And that's okay. And that might mean that infrastructure fades into the background a little bit, but actually I think that's going to be important for mainstream adoption.
Well, connecting to this, what you think is going to be the UX of the user in the modern blockchain? So we are now in a really much different blockchain than 5 years ago.
Yeah.
Okay. We're going to talk about Vitalik criticizing the L2 model later. Okay, but what I want as a user is a better UX.
Yeah.
I want zero friction. Okay, so what I did as an AI enthusiast, I have a wallet that I did not release that even blocked me to send money to somebody if it's not verified, for example.
Right.
Okay, so what you think is going to be the better UX in the same time span? So next 2 years, next 10 years, when blockchain probably going to be everywhere.
Yeah, I can take this. I think what was mentioned earlier were great examples, especially when you think about Uber or DoorDash or whatever it might be. I'm not thinking about what API is being called into what server and if it's a Google Firebase or whatever it might be. I just am focused on getting my pizza at the right time, and I think the user experience is extremely critical in that. But it's also important to know what type of user we're talking about. Are we talking about the everyday retail user?
My mama.
Okay, so yeah, if we're talking about your mom or whatever it might be, of course we need to have infrastructure kind of fall into the background a little bit. And then when you're looking at it from an institutional perspective, we got another person.
The party's getting larger.
Yeah.
Party getting bigger, guys.
Anybody else coming out?
Yeah. Yeah, and then, but from an institutional perspective, I think they can use this infrastructure to create specialized products and still being able to create kind of that full stablecoin sandwich model, at least from a payments perspective when I look at it. So I definitely agree it's going to probably fall more into the background for a positive thing.
Alex?
I agree. I don't think there is much contention here. The infrastructure will go into the background. Like
we want to forget it.
This is happening.
Finally.
The only exception is wallets that remain self-custodial, that fulfill the original premise of crypto. Like users will be aware that they are using them, just because they need to control their keys and secure them in some way. The user experience still is going to be like very similar. You do one click, everything works, but you manage the secrets.
Yeah. Maybe finger grip.
Yeah.
Yeah, because in the past we was writing down this by hand and no printer, these 12 words,
Yes.
okay, and then keep them safe and then lost them probably, okay. In the near future, since I'm an AI enthusiast, I think AI gonna help the user, okay. What about you? What about your project? Let me just move.
Yes.
I don't want to.
Amir, I'm the founder and CEO at Offchain Labs. I do believe we're in a stage that, yes, blockchain is way too early. But I do see a very powerful tool as form of having that 24-word seed phrase. It gives a lot of the power to the user in owning their own assets. Passkey, biometrics, everything else can be also very helpful in adopting that. But certainly, we're working and building towards a future that blockchains are going to be abstracted away. But that power of the custody of owning your own money is going to remain the main guiding point in building and using this infrastructure to the future.
What is the scalability of your idea? Can we scale tomorrow? Or what do we need to scale to actually embrace 3, 4, 10 times the user we have now?
Yeah,
we start with Sam.
Sure. From a scalability perspective, at least I can speak from Tron's perspective, we've gone there. We're settling trillions of dollars worth of value every single year across billions of people across the world, or at least close to it. We're at about 365 million user accounts, but we're impacting billions of people across these emerging markets. And I think a reason for that is when you're looking at Latin America, Africa, you're looking at APAC, or even across the Middle East, a lot of these countries, they have a lack of financial infrastructure. And that allows them to be more incentivized to self-custodying their assets because there might be hyperinflation that occurs in their local currency, or it might be too difficult for them to move funds from one place to another. I quote this research report that's done a lot. They looked at Africa, specifically 11 different countries within that region, and they found that they were paying about 11% in bank transfer fees. That amounted to about $10 to $12 billion a year that was lost just in bank transfer fees for, I believe it was the year 2023, just looking within those 11 countries. So I think it's very important that we look into those types of use cases, build the proper infrastructure for them that can be done using blockchain rails so that they can send money 24/7, instantaneously, it can be programmable, and it's cheaper. So you can mitigate FX costs, mitigate interchange fees, or whatever that might be as well.
Yeah, I think that scaling-wise, to be honest, I think we're there. There's problems that have emerged because we've scaled, to be honest. Interoperability is one of the big ones. So, it's kind of like a game of whack-a-mole a little bit. Like, you knock down one problem, and then some other problem pops up. But that's good, actually, right? And eventually, we'll knock them all down. But the idea is, in the ecosystem today, I don't think scale is our problem anymore. When I set out, initially to build Arbitrum in the academic sense, almost a decade ago, this was the biggest problem that was obvious. It wasn't evident from the usage at that point because it wasn't being used. It was obvious that the platforms wouldn't scale. I think we've done a very good job, particularly in the Ethereum ecosystem with the layer 2 technologies. And you can actually look at this and see. So last Thursday we had record days. Ethereum was processing about 40 transactions per second. Arbitrum at its peak on Thursday was doing 3,500 transactions per second. And the fees actually, and this is key for scaling, the fees stayed flat, right? The fees didn't jump 30x. The fees actually stayed relatively flat, and users were actually able to have a high uptime, high throughput experience at extreme scale. So I think that we've done a very good time. The problem that and we see many new blockchains today. I think the interesting things about new blockchains, even blockchains launching on the Arbitrum network, like Robinhood's chain yesterday, the interesting thing is not just share scale anymore. It's not, hey, let's create another clone of Ethereum. It's actually like, let's do something unique and customized. And most of the chains we work with, we have over 100 teams building chains with us. They're not copycat chains. They're actually unique chains that are customized to their business experience because we have enough general purpose block space today. But I think the trick becomes, okay, so you scaled, but we scaled in a way that adds these other UX hurdles, and that's why I mentioned we're building zero dev. I think one of the big unlocks here is account abstraction, gas abstraction, chain abstraction. Basically, again, back to the previous point, giving users this abstracted experience. So if I'm a user on, say, Arbitrum today, and I actually want to go ahead and deposit some money in a protocol in Solana, I shouldn't have to manually go through 10 hurdles to get there and end up with like some dust in my wallet there that I have to bridge back, and I have like two different sums of USDC, and I don't even know, like, have a single place. Like, there's no reason today why I don't have a unified wallet that says, okay, you want to do that? One button, done. Unified balances, I see everywhere, and just manages that for me. I think that's largely a UX problem, and I think that's one that we absolutely will solve, but I would say that that's a bigger problem than scaling today. Scaling, I think, is largely a solved problem where we stand today.
Alex?
I agree. I don't think that like scaling is completely solved for all the future use cases, but this is not a problem that is the most important problem today. I think other problems are
What is the biggest problem today?
I think for blockchains, like for real world adoption, privacy is the #1 problem. We need to solve privacy in the right way so that we make the users happy about it, the like proper UX, proper connectivity to other systems, all the compliance protocols, and yet preserving the core fundamental properties of crypto that make crypto valuable. Like if you just do privacy naively, I mean, you can just run an internal system like Hyperledger Bezo, and you get your privacy. But at what cost? Like you just have a database, right? So this is the problem we're focusing on with this is the institutional enterprise adoption bottleneck #1 today.
Yeah, I think like there are so many categories around scaling we can go. You mentioned like institution and like just like normal users, the UX, but I always look at it from a historic point of view. Everybody entered crypto due to this decentralization and its permissionless moneyness. But the scaling was an issue because someone who is unbanked or someone who is in a remote area did not want to pay $0.50 for a transaction that is worth 10 cents. That's where we started moving to other programmable chains that had trade-offs. They had that trade-off of decentralization, permissionlessness, with a little bit of a more of a speed. This sort of trade-offs, I do believe, caused a little bit of fragmentation in the goals that we want to achieve. However, the most permissionless venues started actually scaling more, paying more attention to tools that they can scale further to go beyond that. I do believe these two should not be a trade-off moving forward. It might be a trade-off for institutions that want to own their own execution environments. They want to operate under their own rules. But for normal users, for people who want the future of financial system, they do not have to choose and pick between the two. And I feel like we're kind of stuck between these two realms where smaller retail might now sacrifice that decentralization, go to some other environments for the cheaper transactions. But the bigger asset holders that do care about permissionlessness still choose to park their assets on an archaic chain called Bitcoin, right? So we do need to breach this gap, and that's what we're really focusing on at Buffer, is just breaching the gap of satisfying the needs of both of these parties so we can have them in one place, have them not to really trust anywhere else, to really move around a ton, to actually operate anywhere else. The UX, of course, comes later, like including privacy, account abstractions, gas abstractions, so they don't have to pay gas fees. There are like many other ways to improve that as well. And I think all of these are gonna contribute to bring the demand that we need for the scale that we build. Even if we scale, we have to also take care of the demand side of things, like how are the users going to come in, which comes from the UX, from the privacy, from the other aspects that the scale is going to be a useful thing to use.
So we had Vitalik criticizing L2 this week. Okay, came out that is completely useless. Okay, not useless, but I say that is not anymore the way, okay, to handle the stuff. I would like to know what you think about it. We start with Alex.
I think what he said was...
There's not viable anymore.
No, like, look, he said, we're killing the L2-centric roadmap for Ethereum. So he did not kill L2s, but he killed the L2-centric roadmap. He said, L2s are not Ethereum. They failed to deliver on the vision outlined in the L2-centric roadmap to scale Ethereum with all properties of Ethereum. So we're just gonna then scale layer 1 itself with zk. And I think he is absolutely right there. And he was saying what was obvious to us in the space for quite some time now. I think Ethereum was kind of stuck in these commitments. There was a lot of inertia in the Ethereum core community on actually fixing this. So L2s have played a major role to help Ethereum survive and thrive throughout the transition. But yeah, for fundamental reasons, we cannot scale Ethereum in a way in which Ethereum can scale. So this leaves L2s in a very interesting situation. It's still the best way to launch your own chain. Like if someone needs their own chain for whatever reason, and we have to question, do you really need your own chain, or are you doing this just for, for the fake token premium perspective, whatever? So that route is dead. Now after this Vitalik post, launching the chain for the chain's sake doesn't make any sense. Now, if you really need it for whatever reason, imagine an institution, an enterprise launching their chain with privacy, with some specialized customizations, and they want to be connected to Ethereum, or maybe they just want to launch a chain. Would it make sense for them to launch an L1? Maybe for some, but it's a very, very expensive exercise. You would have to bootstrap security, you would have to bootstrap a lot of things with validation, with the stake, etc.
You need nodes.
It's a lot cheaper to do on Ethereum, and you get a much higher degree of security. But it's really a question, do you need your chain or not? Or are you better off just using Ethereum itself directly? So I think the outcome of this is going to be a very sharp polarization, or a razor on the L2s, who will be pressured to stand the test of uniqueness and differentiation. Not narratives of differentiation, but actual hard-backed features that are different that you cannot get on Ethereum layer 1 itself. Only those L2s frameworks or stacks or actual chains will survive.
Yeah. From our perspective, Tron is a permissionless layer 1 blockchain. I think for us specifically, our biggest ethos right now is to continue to move trillions of dollars of value and empower billions of people all across the world. From what Vitalik mentioned, I'm going to give it to the L2 guys to kind of figure that out and fight that amongst themselves. But what I can say with Tron is we've been able to scale appropriately at massive scale. We've been able to charge extremely minimal amounts of gas fees. And if you're using our resource model successfully, it's nothing, effectively. And we're able to go to markets that have been disenfranchised for decades and able to give them access to payment technology, access to digital dollars, to be able to finance themselves appropriately. So we haven't had any issues with scaling. I do agree fragmentation has become more of an issue, but also scaling in itself, we haven't even hit the pendulum of how large, from a payments perspective, how large the amount of volume that can occur. I read a report that said by McKinsey, and I'm not misquoting this, they said there was $2 quadrillion worth of payment flows that occurred annually just in 2025. So that's 2,000 trillion. The amount of that occurred just for specifically payments in itself on blockchain is very, very small compared to that amount. So we still have a lot more to go, and I do think the technology and the infrastructure is there from a scaling perspective, but the last thing we want to do is get into an issue with fragmentation, where that becomes more of an issue, especially because that's going to deter people from actually utilizing cryptocurrencies, or at least blockchain technology, either from a abstracted perspective or from actually using it on a self-custody basis.
So can I challenge you a little bit on this?
Sure.
Like, it's easy to solve scaling if you give up on some other trade-offs.
Right.
And Ethereum has made a deliberate decision to stick to the highest degree of security, reliability, and decentralization.
Yeah.
Not for the sake of decentralization itself, but because it provides you all of these other properties. Like, it can actually survive a really sophisticated attack vectors.
Yeah.
Which, again, coming back to what we said in the beginning, are going to be multiplied and accelerated massively by the advent of AI. So now, how do you do this? Like, if your scaling is based on a small number of validators who can just throw a massive amount of resources at it, then your attack surface is relatively small for sophisticated and well-motivated attackers to tackle over a period of time, being empowered by the AI tools, right? So doesn't this create a systemic risk where you become so important, you move so much money, nothing happens, and you kind of say like, okay, let's YOLO in even more scalability at the expense of security until something really big happens and takes down the entire chain?
Well, the Nakamoto coefficient of TRON is 14, and that's a massive amount of capital that you need to accumulate to even override the network itself.
But how many servers need to be compromised to create a invalid block? Like, the amount of capital is one thing.
Yeah.
We're talking about technical vulnerabilities.
It's a ton, and we've done an amazing job since the inception. We've had zero downtime since the TRON network has actually launched. And I think that points to a lot of action that we've been able to take and being able to scale.
Compared to Solana, for example.
Yeah, absolutely. and we're extremely decentralized with nodes all across the entire globe. I believe 8,000 plus. So, actions speak louder than words, in my opinion. We've been able to have absolutely no downtime, as I mentioned. And we want to continue to scale in that manner. So hopefully that answers your question a little bit. But, happy to continue to have that discussion.
But what do you think about the L2?
The L2? Hey, I'll let these two guys, I like these guys, so I'm going to say I like L2s, right? But of course, from an L1 perspective, I mean, L2s can have value from a specialized perspective, right? Like if somebody wants to build their own L2 to have access to their own governance, but be able to still benefit from the security that the underlying blockchain itself can have, then yeah, I can see the need for that. And I think that's why zkSync and Arbitrum, they've created the Arbitrum Orbit so that other people can create their own specialized L2s as well. So I do believe there's a benefit for that. But from an L1 perspective, we've been able to scale appropriately. It's permissionless, it's decentralized. Anybody can build whatever they'd like on it. And we want to ensure that obviously no illicit activity occurs, hence what I mentioned earlier. But yeah, hopefully that answers your question a little bit. Yeah.
A lot to say.
Yeah, there is a lot to cover, especially after last week.
Yeah, so a few things. Number one is, from a sheer scaling perspective, and I say this as someone who, again, not only builds an Ethereum layer 2, but actually builds, in our company, the core Ethereum layer 1 validating software as well. We are nowhere near scaling capacity at layer 1 to do anything near what one layer 2 can do, but certainly the some capacity of all the layer 2s that Ethereum is supporting today. And we need to look back no further than just last Thursday, a couple days ago, where there was record volatility, record volumes. Again, Arbitrum, just one layer 2 in Ethereum, and others were doing similar, was processing 3,500 transactions per second at its peak, and these were mostly financial transactions, perps transactions, trading, etc. And my question for you is, and Ethereum was doing about 40 at the time. My question for you is, where do you want these transactions to go, right? They're not going to Ethereum layer 1. They cannot support that capacity, certainly not today. So I don't really fully understand the argument that layer 2s aren't scaling Ethereum. These are either going to be on a layer 2 like Arbitrum, or they're going to be elsewhere. They're not going to be on Ethereum today, and they're not going to be on Ethereum anytime soon.
May I challenge that?
Sure.
So it's been almost 2 years that there has been efforts. I feel like there has been more of an incentive misalignment in adopting the technologies that you can actually directly scale Ethereum transactions rather than fragment and go live on an L2. But because of, for example, base rollups had sort of this disincentivizing alignment to actually go after them, to directly scale the transactions as a roll-up, I do believe that's why like this sort of hopelessness came into the game. That's saying, okay, L2's now on their own, right? Because for so many years, like roll-ups should have actually acted as, okay, Ethereum, it is peak scaling. Now for certain transactions, go to a roll-up, batch your transactions in one, pay cheaper price. Of course, with some sacrificial things around sequencing or other things. But I do believe, like, because of incentive misalignment, L2s started just building their own general purpose chains. Like, everything started moving, even if at the times that scaling weren't needed, it moved there, which created sort of a fragmented user experience, fragmented everything. And that's why, like, at least at Puffer, we stepped in with the baseline native rollup narrative that, hey, we can still scale Ethereum. The rollup-centric roadmap is not that because of native rollups and also base rollups. It's still there, but not in a format of L2s as they are today. But
Yeah,
sorry.
so
Yeah,
again,
but
I don't actually view that as like a challenge. Like, again, you can build an alternative product. If you build a base rollup or a native rollups, you'll run into many similar interop and capacity issues as well. It's not, and you know, this is an open field. I didn't get any money from the Ethereum Foundation ever. We went ahead and built a product that billions of processing billions of transactions, and that's where the economic activity is. But I think the second point I wanted to get, and you know, so Ethereum layer 1 cannot scale. You have an alternative solution that you think is better than the rollup design today, so also an L2? Sure, if you think your L2 is better, like, go ahead and try. I'll let the users figure that out, but today they're overwhelmingly choosing Arbitrum. But I think that actually my second point, which is, you know, there's this concept in the Ethereum world of Ethereum alignment. I've always hated this concept, and the reason I'm building Arbitrum in Ethereum is not as a favor to Vitalik. It's not as a service to Ethereum. It's because the same way I use many other infrastructure components, Ethereum is the absolute best infrastructure, and Alex touched on this before, from an economic perspective, to build a layer 2 technology, to build a secure blockchain like Arbitrum. And Arbitrum today, and that's very important, because it's just like, even if Ethereum became totally combative to rollups, which again, I actually don't think is what Vitalik was saying last week at all, it's still the absolute best infrastructure to build Arbitrum. And I think today, Arbitrum has a very strong identity in and of itself. It's probably true that in 2021, most of the early users of Arbitrum were coming there because they said, hey, I want to build an Ethereum in a cheaper way. But today, I would say the majority of users are coming to Arbitrum because it's the #1 DeFi ecosystem for innovation, right? It's the most active Aave market, the highest utilization Aave market anywhere. It's, you know, 1-2 generally with Ethereum layer 1 when it comes to everything. Perpdexes took off on Arbitrum, right? GMX was the first successful perpdex. Today, perpdexes are doing, you know, every single perpdex, or almost every single successful perpdex has a deep connection to Arbitrum, whether that's like Variation, Ostium, and GMX built on Arbitrum, whether that's Ethereal that's built as an L3 on Arbitrum, whether that's EdgeX, the #3 perpdex that just announced yesterday they're building an Arbitrum chain, whether it's Hyperliquid that historically sourced all their USDC from Arbitrum. Arbitrum is providing real value to real users, and that's why they're choosing Arbitrum today. It's a strong identity in and of itself. And Ethereum layer 1, in my opinion, cannot meet that capacity today. We're driving a ton of adoption to Ethereum, but the point is, you have to look at what the users want as well, and that's where the users are going. And if you have a different solution that you think, you know, you should bring it to the market and see if you can attract users. But you know, this misalignment is who are we blaming for that? The fact that the market, it's almost like, oh, we didn't succeed because someone, like, build your product and succeed. And if it hasn't succeeded, it's not my fault.
I certainly did not bring alignment into this, but it's good to actually bring that back up. I do believe L2s have contributed a ton to EVM. They raised billions of dollars. Matter Labs, zkSync, advanced the ZK tech. Without that money raised, without that like kind of focus, that same ZK is now used in scaling Ethereum L1 itself. So the contributions have been huge. Arbitrum as a team, you guys worked on clients for Ethereum L1 itself. So you have directly contributed in hardening its security and actually like delivering more to it. But then again, like, this comes to that fundamental value of like how the incentives and roadmaps are aligned. The expectation was to ultimately create every value accrual and scaling all back to Ethereum L1 from the L2 side. But of course, when you create a company, the incentive is not there for it. you're far more incentivized now to go where the route of Arbitrum is going, where they can create their own ecosystem.
Whose expectation was that, though? Because if you actually read Vitalik's 2020 post, which I've read many times, it says, that, and this is like a following thing, it says, one of the core reasons for building layer 2s that Vitalik mentioned in that post, and he can change his mind in 5 years, by the way, so
Yeah,
that's
people
fine. But
make
like, when you say
mistakes.
the expectation was, I'm going to have to push back there, because he says there, one of the benefits of the layer 2s, he's like, people like to control their own island, than have a big say in their little island, than rather be a small player in a larger
Exactly.
place. Right? He writes that in the roadmap. He also says, L2, in this initial roadmap, he says, L2s having their own tokens is a good thing because they can actually fund things like that L1s can never fund. So
Yeah.
we can change our mind after 6 years, but I think it's disingenuous to say the expectation was that L2s would do this.
Yes.
Actually, that's not the case. I think the expectation was
people make
L2s would do what they're doing
mistakes,
today.
But like the fundamental, like people make mistakes on many posts and they change it over time. So I feel like in the past 6 years, like it changed many times over time. This is one of the most
This is how
like,
we grow. We make
booming
mistakes.
one. Yeah, this is one of the booming ones that came out. But I certainly do think, again, like at the time that SVM was capturing the EVM market share, L2s stepped in and actually gained that adoption. They advanced the technology. But we are now entering a realm that Vitalik's post meant that this whole stage 2 L2B thing is now gone. Like it's releasing the L2s of like going after that. L2s can go now become either if they were an existing general purpose chain that really succeeded, like Arbitrum, they can just now go their own path of getting closer to an L1 or even a side chain, and they don't have to be pressured by those certain things that they have to deliver on stage 2 on other like categories that Ethereum had defined. Like L2-bit was a definition of Ethereum L1 of, hey, do the things the way that I say so you can be considered safer for users to use. Now they are sort of being released at that.
Why are we? I mean, who's releasing them of that? I think it's it's up to the community to actually differentiate between the L2s that are actually decentralized, secure, and meeting those requirements, and those that aren't. I mean, Arbitrum has built from day one with security in mind. We were the first L2 to reach general purpose
there
L2.
are-
I have to agree. Stage 1 is dead. Sorry, stage 2 is dead.
Oh, I never
as a
liked
concept.
stage 2 in the first place. I think
But
it's a
that's
mistake.
exactly what I'm saying.
But I think there are better. The reason is I think stage 2 doesn't really capture. The problem with stage 2 is I could make my rollup stage 2 today, and a lot of the lower value rollups have, because it doesn't say anything about the safety. It's like get
Yes.
rid of all the
That's what
controls.
Vitalik said.
and
But
no
if
more-
stage 2 is dead, stage 1 is dead as
no,
well.
I think we need a better definition of
If
stage
I can
2.
just
That's
say-
not easy for people to just say, okay, I'm stage 2 because I don't care about security. That's a mistake in the definition of stage 2.
You know,
That doesn't mean we shouldn't have a higher definition of security.
No, sorry to cut anybody off. If I can just come in too and just say, if you want to look for any example as to a more alternative technology that can actually scale, looking at it at its time. Again, at the time, before even L2s, when it was just Ethereum, there was another blockchain that came out that also promised low fees, high throughput, and 5 to 7 years later, we've now amassed almost 30% of the entire stablecoin market cap, trillions of dollars in value every single year, and you can look no further than Tron. So I just want to point that in as like an alternative, because we talked about alternative technologies.
Tron
So there is use for alternative technologies as well, and you know,
Is
we
there
are
use
for
successful
that?
on that. Yeah, but you know, we're talking about infrastructure. I just
Good
wanna-
plug. I like
Yeah.
that.
Okay, thank you very much.